we're just below 800,000 vehicles for the year at this point. And so that's really not a big stretch for this organization. That's certainly within the realm of possibility for this organization, given the capacity at the factory. At this point, the company has a really substantial lead from a product perspective, both from a brand awareness, but also a performance perspective. And the leg higher that we're calling for in the stock is really related to their ability to bring that FSD product into the market. And we think the real core thesis on Tesla right now is around that data advantage that they have versus peers. And that's really the core of our thesis here, that Tesla is going to be a leader in that level 3 plus ADAS into level 4 over the next couple of years, and that's what's going to get priced into the stock over the next 18 to 24 months.
Those record deliveries came despite the chip shortage. So what does that tell you? Does Tesla just have a better grasp of its supply chain? If so, what does that mean for increasing competition this year?
I think it does. It's also an organizational focus. I think they understood that this was going to be a challenging quarter and really focused their efforts in China and in the U.S. to deliver vehicles into local markets rather than try to emphasize some of the European markets. So I think it's a combination of managing some of these issues a little bit more effectively than some of their peers, the size of the organization, and then really focusing their efforts in the right end markets to actually deliver in the quarter.
Colin, I wonder if what is your full year delivery forecast? Can we put a 9 handle on that? And how do we get to that kind of a number given some of the inventory constraints we're seeing in the chain?
Yeah, we're not calling for that big a number just yet. We're just below 800,000 vehicles for the year at this point. And so that's really not a big stretch for this organization. We've been a little bit conservative around a bunch of the logistics challenges for all of our companies as we entered into this re-ramp, given what we've seen with some of the shipping and as well as some of the component supply. And so, that's certainly within the realm of possibility for this organization, given the capacity at the factories. And really, it's going to depend on how well they manage some of the components and some of their really essential elements like battery supply, as well as IGBTs, MOSFETs, and as well as the chip shortage that everybody's managing right now.
Colin, looking on the flip side of those supply questions to the question of demand, how crucial is it that the Biden administration lift its ceiling on these tax credits for EV vehicles going forward?
I don't think it's really crucial for Tesla. At this point, the company has a really substantial lead from a product perspective, both from a brand awareness, but also a performance perspective. They've really done a nice job on designing the powertrain, trying to evolve the actual offering for consumers and being able to deliver vehicles. It's actually quite difficult to make these EVs, and we're seeing that really play out with a lot of these other platforms as they struggle to really hit the timeframes that they've set out for themselves. So for us, the Biden administration for Tesla is a nice to have, not a need to have. We do think that certainly is the Biden proposal is beneficial to sentiment. It's also going to support a lot of the infrastructure build out, from a charging perspective, as well as some of the other ease of doing business for a lot of that infrastructure that's going to support the rollout of vehicles. So it certainly would help Tesla, but it's certainly not embedded in our numbers at this point.
Right, and Colin, last question for you. I'd love to hear your thoughts on Tesla's FSD full self-driving feature, currently priced around $10,000. What do you think it's worth? Is it going to be a revenue contributor this year?
Yeah, absolutely. So, our thesis at this point on the company is that they do have a substantial lead on the EV powertrain, the battery design, and rolling vehicles out to consumers. And the leg higher that we're calling for in the stock is really related to their ability to bring that FSD product into the market. They have enough vehicles to really roll out, about 6 billion test miles per every half year at this point. That's going to accelerate. And we think the real core thesis on Tesla right now is around that data advantage that they have versus peers. So to think about this, about 1 million vehicles on the road versus peers that have a few thousand on the road. And so their ability to test products in shadow mode with their customers in real life situations and really roll out, highly, reliable new products through that platform and do that over the air is unparalleled at this point. And that's really the core of our thesis here, that Tesla is going to be a leader in that level 3 plus ADAS into level 4 over the next couple of years. And that's what's going to get priced into the stock over the next 18 to 24 months.